I think it is time for me to bring on our next pair of speakers. And I'm going to do that right now. There they are. Jim Mastrandea, the CEO and chairman, and Dave Holman, the CFO of Whitestone REIT, ticker WSR on the screen. Guys, good morning.
Good morning.
How are we doing today?
We're doing great. How are you doing?
I'm doing fantastic. I don't know why. Today feels like a Friday to me. Does it feel like a Friday to you?
I think it's Thursday, but does feel a bit like a Friday.
Maybe that's every day for me. Okay. We have some charts for you. We have a presentation. Guys, go ahead. Let's bring it up on the screen. Production team, we got it. Jim, Dave, the floor is yours.
Well, thank you so much. I am Dave Holman, the CFO, and sitting next to me is Jim Mastrandea, our chairman and CEO, and we're delighted to be here today. We were to provide an overview and update you on some of the exciting things that are happening at Whitestone REIT. Since we'll be sharing about our present and future plans, we ask you to refer to our forward-looking statements that you'll find in the appendix of our handout presentation. And now let us get on to sharing some exciting things about Whitestone. At Whitestone, we serve our shareholders by generating attractive returns by buying properties that appreciate in value and hedge against inflation. We serve our local communities. In those communities, we lease, manage, own, operate centers in some of the fastest growing cities in the states of Texas and Arizona. And then really the core of what we do is our entrepreneurial tenant base who are looking to achieve the American dream and really mitigate through various economic cycles. Just real quickly, some of the highlights about Whitestone. Today, we have approximately 5.1 million square feet. We have a little under 1,500 tenants or our customers. Our occupancy in our properties is just about 90%. And we have a management team that has significant collective experience and ownership in the business. We really own properties where people want to live. Whitestone has a best-in-class geographic focus. That best-in-class geographic focus has helped us to really outperform during the pandemic, because in our markets in Texas and Arizona, the business activity largely has not been shut down. Our markets have lower unemployment rates and are today benefiting from significant net migration of consumers and businesses into our markets. We focus on community-centered properties in the Sunbelt in business-friendly states with high-growth markets. Our focus on the community is what differentiates us from many of our industry peers. Our team is passionate about making a difference in the communities in which we operate, and we're strategically positioned to benefit from the current migration trends. We also own properties where people are moving. Speaking of migration, we operate smaller open air properties where people want to live and are moving. Our community-centered properties tend to be in more affluent suburban areas surrounding rapidly growing cities. And as I said, it's not just individuals moving, but we're seeing well-known business brands such as HP, Tesla, Oracle moving into our markets. If you look within our markets, not only do we focus on business-friendly states, high-growth MSAs, but then within those MSAs, we look to own properties at the best locations. And that's evidenced by our household incomes that surround our properties, which are among the best in the retail shopping center industry. And now let me turn the presentation to Jim to discuss our consumer-driven business model and our value enhancement focus.
Thank you, Dave, and thank you all for joining us today. We're excited about being here and giving you an opportunity to talk about Whitestone once again. Understanding our business model is really the key to how you make an investment into Whitestone REIT and how you can understand how we operate. It's very different than what you might have seen in other retail businesses. We proactively apply our business model. We do this by analyzing demographic data and consumer psychographics. We use a lot of artificial intelligence. We provide community services to consumers not available through e-commerce. We deliver proactive leasing methods and methodologies to our tenants so we can have the proper tenant mix. And then along with that, we deliver just upscale property management services. We acquire properties that are usually mismanaged, over-leveraged, or foreclosed on in receivership, and then we turn those around. We look at the data in the marketplace, we understand it, and it gives us knowledge to assemble the right tenant mix. For example, our tenants, we find that they are better positioned to thrive if they're interconnected to each other in the e-commerce age. Our diversified mix of tenants provide essential products and services to the surrounding communities cannot be acquired online. We have minimal big boxes, smaller business owners who are committed to innovating, growing, and contributing to the communities. Our visibility in the local markets provide us with invaluable perspective on trends into the consumer and the tenant behavior. And that's one of the things we do particularly is we focus on the consumer. Through that knowledge of the consumer and tenant behavior, we put together an optimal tenant mix for each property. Property by property, we do this. We structure our leases to meet the needs of the growing businesses, to ensure tenant commitment through personal guarantees in every lease we have, to maintain landlord control over the property through minimal tenant covenants and co-tenancy requirements. In other words, that if a tenant does default for some reason, they're very small in space, 3,000 to 5,000 square feet, but it doesn't, the next door tenant has no rights to tell us who we put in that space. We also we focus on the businesses, our tenants, so their businesses can grow and we help them grow. And then we also participate in percentage of the rent clauses which we have. We have rent escalators that go from anywhere from 2 to 3%, and sometimes the cost of living index. And as we renew, we also have what we call triple nets. We pass that through to the tenants. As a result of this disciplined process, we steadily increase the value of each property. We focus on quality in our properties, the tenants, and tenant mix, and we generate what we think of as a quality and stable revenue for our shareholders. Let me turn to another aspect of the company. Our value add really begins at the time of acquisition. We capitalize on what we refer to as the intrinsic value in our portfolio. And we do this just in terms of the properties that we look for and we search for when we make an acquisition. We bought every property one-off, we targeted them, we found the communities we wanted to be in, we found the owners, and we made an acquisition. We capitalized on the intrinsic value in the portfolio, and we do this by expanding the tenant space and property square footage. If there's an out parcel, usually we like some vacancies in the property. If it's a large box, we break it down into smaller spaces. We also develop and redevelop either adjacent land that we own or internally. We look for, as an example, common parking ratios of 4.5 parking spaces to every 1,000 square feet. A lot of times when you buy a second or third generation retail center, it has a lot of parking, and sometimes you have 7 and 8 spaces for 1,000 square foot of space. We know that we have land in there that we can get entitled. We also grow the property net operating income. We do that square foot by square foot. As a result of this focus, since our IPO, we have grown our occupancy by 12% and our annualized base rent per square foot by 91%. Highlighting the success of our value add focus is our same store growth, which has been at the top of the industry in good years and during the pandemic, as shown in the chart, which you will see for 2018, 2019, and 2020. We add value through just prudent and judicious capital allocations, looking for risk-adjusted returns for every dollar we invest. And we add value through well-timed and well-executed acquisitions. Since our IPO, we have acquired over $1 billion in real estate and have done it deal by deal with an average acquisition volume of approximately $100 million per year. We currently have significant embedded value in our portfolio. We look to extract that over time. As you can see from this slide, we have approximately $230 million of development and redevelopment opportunities within our portfolio. We believe this will produce incremental $24 million in net operating income, and we think it'll create $175 million in value above our development costs. We do this precisely through our modeling, market testing, market studies, and we understand the markets and the demand for our product. While we don't have time today to share all that we would like to, you will find additional information in some of our case studies about the future of the strategic development opportunities in the full version of our investor presentation that we have provided for you to download for your reference. And our website is www.whitestonereit.com. Also is a great source of more detailed information. And now let me turn it back to Dave to discuss our capital management, track record, current valuation, and the progress and what we're doing in our ESG efforts. Dave?
Thanks, Jim. Let me touch on our track record. As you can see from the chart, we have grown our top line revenues, property net operating income, and our corporate bottom line funds from operations since our IPO. We've been steady, we've been disciplined, and in 2021 really have fully recovered from the impact of the COVID-19 pandemic on all of our businesses. Not only do we focus on our short-term and quarterly financial results, our yearly financial results, but as a company, we have a long-term value focus. In doing that, we have a long-term focus on continuing to improve our overall debt leverage and scaling of our G&A infrastructure. In 2018, we set some big goals in these areas, and we've made significant progress on these goals over the last couple years. Let me touch on the growth and income opportunity for shareholders. Whitestone provides a stable cash flow and an attractive growth opportunity for investors, really through strong organic growth, opportunistic acquisitions, and an improved market valuation as we execute. Our dividend pays 43 cents per year, and we pay it in monthly increments. And we are one of the few REITs providing a monthly dividend payment. Our dividend is well supported by cash flow and provides a premium yield of just under 5% versus the shopping center industry average of approximately 3%. Regarding the growth opportunity for investors, currently our stock is trading at a historic discount really on any metric you look at. If you look at the cap rate of our portfolio, which would be a kind of a private market valuation of the real estate, today the market valuation is about a 9 cap, and that compares very favorably to the shopping center industry average of about a 6 cap. If you look at a multiple on earnings, today Whitestone stock trades at about a 9.5 multiple on our FFO per share, and once again that trades very favorably compared to the peer group that's just a little under 15 times. So we feel like today is it's a great opportunity for investors to participate in both a growth and income opportunity. And then lastly, let me touch on our corporate responsibility, which involves our commitment to people, communities, investors, and our environmental stewardship. In 2020, we published our inaugural corporate responsibility and sustainability report. And in 2021, we are continuing in the progress with engagement with ESG rating agencies, proxy advisors, shareholders, and ESG benchmarking platforms in order to continue to develop our ESG efforts. We are committed to reducing our environmental footprint and impact on the planet. It will continue to be a focus for us. And in 2021, we initiated our green energy program. We have an ongoing transition to energy efficient lighting. We are installing recharging stations for electronic vehicles in many of our properties. And throughout all of our properties, we look to design walkways, bicycle paths, and really improve the walkability and accessibility of our properties. Our commitment also involves the well-being of our associates and the communities that we operate in, and it's very crucial to all that we do. Our properties serve multicultural, diverse neighborhoods, And our efforts help many entrepreneurs achieve the American dream. At Whitestone, we have a diverse workforce speaking 30 different languages, and we have a commitment to diversity and inclusion. And lastly, our corporate commitment to shareholders through continued engagement, transparency, and solid corporate governance. We have annual elections for all of our trustees. We've appointed a lead independent director and had regular refreshment of our independent trustees. We also believe that meaningful stock ownership by trustees and officers puts us shoulder to shoulder with investors who have, and we have established ownership guidelines for trustees and officers. And then just in conclusion, before the Q&A session, just to highlight, we have a premier portfolio with a best-in-class geographic focus. We are strategy-driven, results-focused to provide values for shareholders. We have the team to execute. As Jim shared, we have significant opportunities within our portfolio for both organic and external growth. We've got a track record of return from investments, and we're really driven to provide both growth and income for our shareholders. And with that, Jim and I would be happy to take some questions.
Thanks, Dave.
Yeah, if we can, I would love to go back to that slide that showed all the states you guys were in. You know, I saw Tennessee, I saw Texas. You know, you had Austin. Like you said in the presentation, all places of the country that people are moving to, Florida, right? Colorado. Was that intentional?
Intentional, we're in those states. That's correct.
Yeah.
We look at being in Texas and Arizona as being business-friendly states. In other words, the regulations in the states, the laws, the all the surrounding characteristics, they give us the ability to really buy real estate and control the real estate. In other words, the states that have, for example, there's a rent moratorium on right now in some other states where you can't collect the rents. We don't have those kinds of moratoriums in Texas and Arizona. Texas, there's no income tax. A lot of people are moving there because they like that. We designed this model very specifically with a blank canvas back in 2006. We started putting together all of our plans in 2008. We started with a $150 million portfolio, and we took it public in 2010. So piece by piece, we have put it together intentionally. It's almost like a fresh canvas that we have painted.
I mean, I look at every state on that map. So, you know, Texas, Arizona, or where you currently are. And, you know, if you've been following the headlines for the last several years, but especially since COVID, you've seen, I'm sure you guys have seen them as well. People are leaving New York. They're leaving California. They're leaving New Jersey. And each one of these states you have here has like a quote unquote trendy city, right? Austin, San Antonio, Phoenix, Nashville, Charlotte, you know, right? Denver, all like really trendy. Miami, you know, every Wall Street firm is opening up offices if they don't have one, you know, in South Beach, it seems like, right? So I like that you guys are like the encapsulation of that trend, right? Of people moving elsewhere, frankly.
That's great.
Yeah. So the states we've got in yellow here, those 5 states, North Carolina, Tennessee, Georgia, Florida, Colorado, those are the 5 states that you have targeted as potential expansion. I don't know if you've given a timeline for that, and also if you have other states that are on your radar.
Yeah.
Well, thanks. Obviously, one of the things that Whitestone brings is a very targeted geographic focus. As you said, we like all the characteristics. So we have targeted some other states that have similar characteristics to those we have today. You see them highlighted in green on the chart. And I think one of the things we do is we like to really get into a market and build a scale. In the markets we're in today, we usually have a grouping of assets and a team in place that really knows the local communities, knows the local operators. And really, you know, we still believe that real estate is largely a local business. And what we've seen throughout the pandemic is those really good local operators have really outperformed many of their national competitors.
Yeah, and let me add that what Dave is saying. We picked those states because they have the same similar business-friendly nature. You know, for example, and just to give you an example of what I mean by that is, if a tenant doesn't pay their rent, we work with them, we give them an opportunity, and we're only talking about 3,000 to 5,000 square foot tenants. That if they don't want to work with us and we don't see them making an effort to get their business up and running the way it should be, We can give them a 7-day notice. We can lock them out, and we can replace them within 30 days. What that does is that gives us a continuation of our cash flow, which is very important to us as you build a publicly traded real estate company. The other thing we've identified in those states is that we're very, very big on training of people and developing them. In our Austin, San Antonio region, we trained a person. A fellow was with us in Phoenix. He was in the leasing side. We sent him to graduate school. He got his MBA. He now runs Austin and San Antonio. We did a similar thing with a gentleman who runs Dallas. He worked for us in our Houston office. We trained him through our REIT training program, sent him for his MBA in our First Scholar program. He now runs our Dallas operation, and in a very similar way in Phoenix. So we have business educated individuals who are also trained by Whitestone. And what we are now doing is working on the next person or two to move into those markets that we've identified on that map. Very key to us that all of the operations at each part of our geographic dispersion there, that they'll operate the same way.
One more before we let you go. Can you guys just speak a little bit to the, your tenant mix? You talked about entrepreneurial tenants. You talked about, 3,000 square foot spaces that are, a little larger. You've got shorter lease terms. Can you just speak a little bit to like the different challenges of that mix?
Yeah. So Jim and I might go back and forth a bit. So I think tenant mix is really core of what we do. Many years ago, we identified that we believed the strong local and regional tenants would be really outperform some of the bigger, larger national tenants. I think we've seen that happen as we came through the pandemic. Whitestone's tenant mix, which is largely essential service providers. About half of our properties have a grocery anchor component, but we always look for tenants that drive traffic. So we feel like putting together the tenant mix is crucial and really requires local knowledge. Many of our peers have more national focus where they work with retailers to open multiple locations within a market. We'll target specific use within a property, and then we'll look for the best operators. So we put together a tenant mix that we think is based on our research, will thrive in the future, really do well in a continuing to grow e-commerce age. And then, as Jim said, we look for tenants that complement each other. So one of the things we do is work with our tenants to understand what businesses surrounding them are complementary. And then we look to structure our leases in a way that helps them thrive and helps us participate in that growth.
Yeah. And just one more example, I mentioned earlier, we use artificial intelligence. And so we measure the traffic. We can do it daily to our properties and to our tenants. So we know that our traffic is up like 17% since the COVID, which is very, very strong to begin with. And that's been very good for us. But in one property, just as a way of example, we have 8 restaurants. We look at our psychographics. We know how many millennials are in that market. We know how many Gen X's are in that market. And we know what their preferences are. So where we have these 8 restaurants, we don't have 2 steakhouses. We only have one upper end steakhouse. We have a pizza. We have a healthy restaurant. We have a barbecue restaurant. So we mix those to blend in with the surrounding community that we have where we've studied demographics. Again, we do that property by property.
Jim Mastandrea, the CEO and chairman, Dave Holman, the CFO of Whitestone REIT, ticker on the screen there, WSR. Guys, thanks a lot for coming on today.
Thank you.
It's been our pleasure.